the meat of the day. Before we start, ladies and gentlemen, we'll be talking about Ghana's equity and impact investment ecosystem and environment. This is our topic for the first presentation that will be coming your way. But I'm just going to give about 2 minutes so that the rest of those that are outside can quickly join us here so that we can start with the first presentation. All right, welcome back once again, ladies and gentlemen, and we're going to go into our first presentation for the day, and the topic is Ghana's equity and impact, investment ecosystem and environment, attractiveness and competitiveness, structure, participants, performance, and gaps. And to help us do this, I'd like to call on the CEO of Impact Investing Ghana, Ama Latte. A round of applause for her.
Thank you, and good morning to everyone. It's a great pleasure to be here. To the President and the CEO of AGI, all the members of the diplomatic corps who are here, ladies and gentlemen, good morning. I lead an organization, Impact Investing Ghana, which is the National Advisory Board for Impact Investing in Ghana. We're a private sector initiative that is working on building an ecosystem for impact investing. Many of you may be wondering, what is impact investing? Impact investing is when any financial institution or investor makes an investment for a financial return, but also because they want to see some social impact. That social impact could be jobs, it could be a better environment, it could be safety, it could be any of the social, the SDGs or any other impact. Now in Ghana, one of our biggest challenges is jobs. And so financing for small and medium enterprises, especially manufacturing enterprises, is one critical impact area that we're trying to rally support for. And this morning I will share highlights from a research report that we launched earlier this year on impact investing in Ghana that outlines the organizations in the impact investing ecosystem, and it outlines 10 key gaps that, if addressed, could unlock funding for SMEs in Ghana. Now, as the whole world faces many challenges, and Ghana is not left behind, being able to connect with investors that care not just about return, but also about impact is important, because they may be willing to overlook some of the other risks because they see the potential of walking alongside a business or initiative or a country into prosperity and into transformation. So we'll talk a little bit about who is in the impact investing ecosystem and what the equity landscape looks like. So an ecosystem is made up of suppliers of capital, the people who have the money to spend, and people demanding capital, mostly businesses, and I know we have a lot of businesses in the room. But we also have what we call market builders, organizations and professional services, organizations like capital raise service providers, lawyers, accountants, and they could be accelerator providers, other people in the ecosystem who provide a service to either help the suppliers of capital to deploy their money efficiently, profitably, and well, or the people demanding money, the businesses, to do the same. And then finally, we have governments. Governments are very important. They create the policy environment under which both the demand and supply of capital can be effective. And so I'll talk about some of the gaps that concern government also. The whole ecosystem must develop and grow, not just one part of it. And it's important that we have a holistic view to the ecosystem and how it is changing in Ghana. So who is in the impact investing ecosystem, or who is in Ghana? We have about 38 venture capital and private equity funds. Not all of them may be domiciled in Ghana, but are operating and investing in Ghana, our research identified. There were about 12 development finance institutions. These are financial institutions set up by governments to invest in the private sector. We found 27 corporate pension trustees. These are institutional investors who are holding your pension funds, and those pension funds are a pool of funding that could go into buying government bonds, which is what they do with about over 90% of your pension, or it could go into investing in viable businesses to get a return, but also make the economy more productive. We have about 7 government institutions whose main goal is to fuel and channel investments. And we found 7 crowdfunding platforms. They are doing much less than the rest of the ecosystem. And then we found also 5 guarantee funds and de-risking mechanisms. Now, these guarantee funds are people who will come alongside an investment and say, we know that it may be risky to invest in this sector, say agriculture, but it's important to the ecosystem, it's important to Ghana, it's important to jobs, and so we'll give a guarantee to enable that investment to happen. So as I talk about the gaps in the ecosystem, you'll see how all these different kinds of institutions interact to make the ecosystem work. And the big question to ask yourself is, where am I and what can I do? I see a cross-section, businesses. I see people from, for example, a development finance institution or an international development agency. And the question is, what do these gaps mean for me? What action must I take to be able to thrive, to be able to succeed despite these gaps? And what action can I take to fill these gaps, to be part of building them? So, gap 1 was that there are limited local financing vehicles and not enough local institutional investors. Limited local financing vehicles and additionally not enough local institutional investors, especially financing vehicles that want to invest equity. So there is a need for patient capital and affordable capital, which means that we need to look, for example, at equity. Equity is when an investor comes and instead of giving you money and charging you an interest rate right away, they are now taking a percentage of your company, giving you money to work in the company because they believe in your idea and in the management. And when you grow the company to a big enough size, they will exit either by selling to you or to another investor, and they want to make a profit. They are not doing this because they like you, but because they believe that this company can actually make them money that is comparable or more than what they would get in a similar investment. Now, if you go to the report I referenced, Impact Investing in Ghana, on our website, impactinvesting.org, you will see some of the root causes of those gaps and some of the recommendations for filling those gaps, and some of the influential actors, some of whom may be in the room, like the Venture Capital Trust Fund, the Pensions Industry Collaborative, and others. But because of time, today I will focus on the gaps and highlight a few of the root causes. So the second gap is quite similar, that there are inadequate catalytic capital to increase the volume of investments and to deliver long-term capital at a cost and size that the market needs. So this is because Ghana just does not have catalytic investors. Catalytic investors are those who want to unlock more capital. So the impact they are looking for is that more capital comes into the ecosystem. And we also don't have enough people connecting local and financial, especially private equity funds, with capital catalytic capital providers. The third gap is a mismatch between the demand and supply of investment funds. So the research found that a big percentage of the businesses looking for money were looking for amounts below $1 million. The bulk of them were looking for amounts between $50,000 and $250,000. But the bulk of the investors wanted to invest amounts above $1 million. So there's clearly a mismatch. And so there needs to be some bridging, some market deepening to be able to create or draw in or have a value proposition for investors that want to invest less than $1 million. To be able to, the good news is there is a pipeline. If deals can cross this gap, and get to the point where they are ready and able to take $1 million and over, there are investors that are interested in those deals and ready to invest. The fourth gap, which I'll just gloss over, is that impact investing is not understood. And so, especially for many local investors, the idea that you could structure a deal to have profit and still have an impact outcome and work towards that is new. The fifth gap is about the demand side. We have very low capacity of businesses, especially with working with long-term capital providers. And we have inadequate capital raise services. So our businesses don't understand how equity works. They don't understand the various processes to be able to secure equity funding. They don't understand how to prepare for something we call due diligence, which is when the equity funder comes to your business to inspect it and ensure that it is what it says it is. And they will check everything you've told them. They will check legal records, financial records. They may even go and talk to your nursery school teacher if you cite something that happened then as a reason why you have a strong character. They will check everything. So if you don't have, if you're not prepared for that because you have no records or your management team is not prepared for that, it will drag forever and ever. You will never be able to close that deal because you can't prove any of the things that you claim. And alongside that, if you had a trusted professional who has helped many businesses raise this kind of money, who would walk alongside you, that's a capital raise service provider, you would be able to close the deal better because you have that advisor. We don't have enough of these capital raise service providers. We have a few, but they are not adequate. And because of lack of understanding, they may not even be patronized as much as the need in the system would require. The sixth gap is, although the enterprise support sector is growing, there is inconsistent quality. So these are the guys who want to help the demand. And there's a lot of you in the room, accelerators, incubators. There's inconsistent quality in the service, and there's inadequate data on the results. And so a business that has to join an accelerator program is asking themselves, it's going to take my time. What am I actually going to get out of this? And sometimes there's no clear understanding what I will get out of the program. So if there's no funding, businesses many times are not interested. Gap 7 is there's inadequate data, research and insights on the ecosystem. And we're hoping that the research report and other reports will add to the data in the ecosystem. And gap 8 is that there's inadequate collaboration among ecosystem participants to fill the gaps. And that is one of the reasons why we set up a number of collaboratives. One of them, the Pensions Industry Collaborative, is working on unlocking pension funding for long-term investments into businesses and is working on a number of initiatives to make that happen. And we want to encourage AGI, who we're already collaborating with you, and other organizations in the room to explore collaborations that can fill some of these gaps. And then gap 9 is that ecosystem participants, these include asset owners, government, regulators, market builders, we do not adequately pursue innovation and experimentation and change, especially to address the gaps. And so change is slow, it is not fast, and there isn't always a culture of innovation when it comes to financial services. businesses, especially informal businesses, are always innovating, especially to deal with the operational challenges that they have to deal with. But big institutions don't change very, very quickly and very often. And the last gap has got to do with government. Even though there have been some improvements in the policy environment, the regulatory environment as a whole does not sufficiently enable, facilitate, and encourage investments. And there are many reasons for that. The fact that, for example, our pensions industry is young, and so it started very conservatively, and the rules did not allow for pension funds to actually be invested. That has changed, and now you can invest pension funding, and so the regulatory environment is speeding up. And there are issues around taxation, which AGI highlighted yesterday, and other issues that hold back business, because at the end of the day, you want to make a profit, and so the environment must be such that that is possible. So I'll end by saying what is needed is more collaboration on an ecosystem level. For an individual business, it's being aware of the gaps and ensuring that you run your business in a way that works against the gap. So get to know a capital raise service provider. Begin to think about what expansion looks for you. Begin to understand what impact could mean for your business and how your business could contribute to social and environmental impact, not just about making profits. One, because it's good for business. Impact enterprises many times are more resilient than other enterprises. And so it's good for business, it'll make you happier, and you will be able to attract impact investors. If you are a market builder, begin to think about how you can, in the way you do your work, address some of these ecosystem gaps. Discounts for smaller businesses that are trying to bridge the gap, etc. And if you are government, begin to think about how your policies could build the ecosystem, not just run programs through government departments, but through collaborations with key ecosystem players who have direct access to the suppliers of capital and to the businesses that you want to impact. Thank you.
Okay, so ladies and gentlemen, for the last time, impact investing is the investments made with the intention to generate measurable social and environmental impact alongside a financial return. Thank you very much, Ama Latte, CEO, Impact Investing Ghana. All right, so ladies and gentlemen, our next speaker is not here yet due to an emergency, but then she's going to join us in between time. So we are going to move into our first panel discussion, and I would like to invite our panelists to their seats, and I'd like to start first with Ama Latte. Please join us on stage. I also like to call on the Executive Director in Jaro Investments Limited, Yao Sampon. And then also Programs Director, Meltwater Entrepreneurial School of Technology, Olufemi Adewomi. One of our speakers will join the panel discussion in between time, and she happens to be the General Manager of Venture Capital Trust Fund, Ms. Hamdiya Ismaila. So when she comes, she's going to join us. And because she was not able to do her presentation, I'm sure that she's going to be given the opportunity during the discussion to talk to all of us. To moderate this panel, ladies and gentlemen, I'd like to call on the investment promotions specialist, Sam Dugan. A round of applause for him.
Thank you. I'm particularly thrilled to see all of you here. I'll actually sit in the middle. There we go. Because this was potentially going to be my personal favorite in terms of session, notwithstanding the session I'm going to moderate later. Interesting start. Yofi Grant this morning said, it's all about investment, to which I absolutely agree. It is all about investment from my perspective. Not simply because I'm focusing on investment promotion. In terms of the sustainability development goals, Ghana's currently got a gap of about $6 billion a year for the next for the next decade that it needs to find. The question is, how do you mobilize that kind of investment volume? The interesting thing, I think, is that no one is suggesting that there's a lack of capital. It's the mobilization of it. All the investment funds are basically saying, we've got capital, but there are other things that we're missing. So my first question is, from your perspectives, how are we going to mobilize that kind of quantity of investment and channel that to businesses so that they can make productive use of it? So can I get you, Amma, to start that? Because I know that you're aware of some of the gaps.
Thank you, Sean. So investors are looking for a return. And so first of all, they need to have a structure that can guarantee them a return. So for example, I talked about pensions, the fact that pensions in Ghana and across Africa is one source. They need to have institutional grade structures that they can invest through that can then invest in SMEs. And we're very delighted when earlier this year we had some of our pension funds invest in one of Injaro's funds. It was a first. And it's the result of a lot of work that has happened over the years, changing regulations, working with pensions, etc., and a lot of work done by Injaro also. And so you need to create those vehicles that address the issues investors have. One of the big challenges in Ghana, if you look at the impact investing markets globally, it's in the trillions of dollars, and it's looking for places to go actively. But we have a major currency risk if you invest in Ghana. If you're not able to hedge for currency and do your investments in local currency, it's going to be very hard for the average SME to turn a return that can give you a dollar-denominated profit. And that is the reality. And so, you know, DFIs are able to hedge for currency through an institution they have called TCX. But it's not open for other investors. We need to begin to think about how we create structures that address some of these practical problems that the global investors may have, and structures that address the challenges that local investors like pension funds may have. Then we will see the money flowing.
Can I ask you to pick up on that? Because you're in the capital mobilization business. So Amma has just articulated that there are funds looking for homes. From your perspective, in Ghana, how are you mobilizing that kind of capital to fill those gaps?
Thanks, Sean. So I think Amma probably alluded to bits of this, but I think there's also something to be said about the quality of the underlying assets that are looking for capital. And very often, I think we sort of paper over the need to have very strong governance systems in place. So you typically have, you know, founder managers who may not necessarily have succession planning. And when you raise this, it becomes, oh, well, then are you foretelling my death, right? But then it's about processes and systems. And the more we identify strong underlying assets, it's easier to mobilize the capital because you know, people are looking for a return, and when the fundamentals are right within the business, it helps make that argument. And investors typically ask you, let me see your pipeline. For, you know, in reviewing the pipeline, they are looking at the quality of the assets, what are the underlying risks, and how, as a fund manager, how are you proceeding to address those risks? But I think it really comes down to the quality of the assets.
I'm not going to dispute you or the issue about succession planning. I've been in a conversation with a business who the child has taken over the running of the business, who's complaining about the parents still wanting to be involved. So I understand that. can I bring it back a step further? Because I know, Femi, you're at the kind of front end of this. How do you set about, through your programs at MEST, getting people to understand that it is fundamentally an asset business that people like you are looking to invest in? How do you get them to prepare themselves to be investment ready?
Thank you, Sean. The question about investment readiness actually, I think, is probably one of the biggest problems. Because people say, I'm running a business, I have a great idea, or I've been running the business for a couple of years, I need money to expand it. And then you ask them, you need money for what? And then they don't have answers for what they need money for, which means the money is there all right, but they're not ready to take it. So our programming basically helps people understand what an investment is looking for. So the governance structure or structures that you're talking about, having a proper leadership team, leadership process, management process in place, being able to guarantee that your sales are being tracked, being recorded in a structured way that can feed into your financial statements that you can now show to an investor to say, my 3-year revenue, this is what it looks like. You can see the growth. Then there's also a big gap in understanding what an investor is looking for. For example, one of our programs, we had about 13 startups in the program, and we said, okay, you're looking for money, so now you need to build a data room. By the end of the program, only about 3 out of 13 had taken their data room to like 75% completion. So the gap is there. So, I mean, somebody mentioned in our earlier discussion the point about willingness. So, yes, I have a problem, but I have habits that I need to change. I have a mindset, like Amma said earlier on, that I need to change. And this is what we try to build through our 3-5 months program, to help them correct these habits, this expectation, the understanding of what is needed, and actually build those structures.
There's potentially 2 questions I can ask about that, but we're getting on a micro level, and the next session is focused very much on this issue about investment readiness. So I won't steal their thunder, but I'd like to come back to Amma, and I'd also like to do some self-publicity. One of the questions that we were asked very early on about the investor community is, who's out there? How do I know about them? How do I get in touch with them? Where do I find them? And to me, incredibly, that information wasn't available. So one of the things that we did very early on was to produce this document. Some of you will have a copy of that on the table. There are more copies of this if you want to come talk to us about them. But it was an exercise in collecting, from an agribusiness perspective, to fill a gap that we identified. Just how I know you've mentioned it, Anna, but just how significant a gap are we dealing with here? So can I start with you? But I'm going to ask the same question to both you and Femi.
So it's huge. The lack of data, lack of information is a huge gap. If you are a small agribusiness company in Kumasi looking to raise money, and you just go on the internet and try and find private equity funds in Ghana, you may not be able to compile a list that is as comprehensive as what you have in that guide. And if you do, you may do what many businesses have conversely do, send an email that says, I'm looking for help, help me, and you'll be ignored. Nobody will respond to that email because that's not the way to approach an investor. You need to have a case, and you may just not know. You're not sending that email because you don't want to raise money. You're sending the email because that's what you know how to do. And maybe in our culture, if you need support for a project, even if it's a financially viable one, you lean on relationship and the goodness of the heart of the institution as a first point of contact. And then you talk about the serious stuff afterwards. So gap in information end gap in knowledge is very, very big. And then also not having models of people who have successfully raised money and understanding the hard work that went into the raising of money and then the results, what happened to the business afterwards. Huge gaps, and that is needed.
Well, in terms of some examples, this afternoon we have two very specific examples of success that I'm really anxious to learn about. But I couldn't help you indicate in your answer the issue about, oh, well, I'll just contact a venture fund or a private equity investor and say, help me. Is this the kind of thing that you have to deal with in your day job?
Yes, so what we've done as an ecosystem is create a platform called Deal Source Africa. It's in collaboration with our Nigeria counterpart, Impact Investing Foundation Nigeria. And it's a platform that connects impact funds with ventures. A business can go and set up a profile. It's a curated website, so it's not just technology. There are people behind it who review each profile and will match you if you are investor ready. So a business that joins and is not investor ready will not get matched. We'll tell you to go to MEST, go find a capital raise service provider, XYZ, and then we'll match you when you're investor ready. So if you're a business, you believe you're investor ready, you can go to dealsourceafrica.co and you can set up an account. Somebody will give you a call, review your material, and do that matching. And that is really to make the ecosystem more efficient and to make those connections work. But in addition to that, the businesses do need to work on their investor readiness, and sometimes they need to have a capital raise service provider come along with them. So that's something we're now in the early stages of including, because we recognize that it's a major gap. We will not see deals unless we're able to add really strong, experienced professionals alongside our businesses.
To a certain extent, I must started to answer the question, but because you're an investor, I want to know the kind of challenges you face when you have your initial conversations with people who are looking for investment funds.
So thanks, Sean. I think we have sort of benefited from cutting our teeth in agriculture as sort of the first sector that we did. So there's some high level of awareness. So having a footfall is actually quite high, and also referrals. But having said that, I think once you start having the conversation, then the challenge becomes having operational data for benchmarking and for evaluating the opportunity. And that's where it gets sticky. And particularly when you're doing investments across the entire agri value chain. So I think it's about trying to drill down and getting the key operational data that allows us to make a decision as to whether we are going to invest or even form a viable value creation plan post-investment. So I think in terms of awareness, generally it's getting better, typically with the activities by Impact Investing Ghana and so VCTF. But I think the data for operational level data is really still challenging.
I'm going to bring you in, Mrs. Lama, if I could. You might be a bit kind of not up to date or up to speed with this particular part of the conversation, but you represent the Venture Capital Trust Fund. So to a certain extent, you're in the same position as in Jaro, but your focus is slightly different. To what extent has the trust fund found the same kind of issues that we've been talking about in terms of the levels of investor readiness as being a gap, and people saying they don't have the information to be able to approach the investor community?
Thank you, and a very good afternoon to all of you. I had a clash, so I couldn't get here on time. Basically, the trust fund actually invests in funds like in Jaro. So we operate as a mother fund. because we are a government setup and 100% back government. And the idea is to promote the equity investments in Ghana. And information really, it's a problem as they've talked about, but we have to drill down to find a manager who understands what he wants to do, who has a good investment thesis that support the real sector of Ghana. So the trust fund, for example, does not invest in import to sell. The trust fund only invests in funds that invest in businesses that operate in Ghana and create jobs in Ghana. And most of it is on value addition. And so really when we started, the challenge has been how do you find these kinds of managers to back, to build that kind of leverage and build the ecosystem around it. And that's what we've done over the last 14 years. Some of the managers invest sector specific, but some are also sector agnostic, which means they invest across sectors. So we are actually working with Njaro. There will be a very big announcement soon. And their investment is going to be on an expansion. I think what I want to say is that if you are a business and you are looking for money, there are different kinds of money. And so the first thing to think about is what kind of money am I looking for? That's very, very important. And after making a decision of the kind of money you're looking for, then you begin to look at who can provide me with this money. And you begin to look at them. So for example, in Njaro would do agriculture, they've done agriculture. There's another one manager I've seen who will be speaking, I think, later after us, who we are sponsoring to do only green. So if your business does not have green DNA, it may be difficult for them to look at. And so we need to have that kinds of information in terms of who to go to and where to go. But investment readiness generally has been a problem. So as Yao said, really digging down to understand the business is a problem. And it is all because there's a whole big information asymmetry, which is one, but also the fact that when we talk about equity investment, it is long term. And the manager coming in is going to benefit from the growth of the business. And so equity investors do different kinds of support to businesses. And last week I did mention that this country is so debt dominant. And I think that also has become one of a challenge we have. Because when you take a bank loan, they are looking at your cash flows and how often you can pay the money. When you take equity money, the person is in the business with you and he makes money when the business grows. And so the needs and the support is different. So there's a lot of push from the investor side, trying to get you to do the right things, and so that the business can grow and make him money or her money. And that is the clear difference between that. And so you need to decide which one of those is of importance to you and open up, because I think sometimes it's not that the information is not there, it's just about trust and opening up so that the investor knows exactly where the challenges are and also how to plug the holes. Sometimes, entrepreneurs sometimes are not too conventional, and I say if they are conventional, they'll be having a job like me, right? They are entrepreneurs, they want to do something, and so they have their own ideas. But if you really want to grow your business, then you need a partner who also brings value in addition to money. If it's just the money that you are looking for, then, unfortunately, you will not be able to grow the business the way you want to. And that is where sometimes the information becomes a problem, because the opening up so you understand what really is the challenge to support is what you are still grappling with. And in terms of investor readiness, businesses really can be ready if they want to, because it's just a bit of trying to understand your business and managing the finances well and making sure that you have the right team. And if you don't have that, it's just so difficult for anybody to really want to come in and be able to support. And the equity money actually can be used to do that if you allow that to happen. So I think it's really allowing ourselves and really looking at thinking through it and trying to understand what kind of money do we need and where we are. It's very important.
Femi, can I ask you to pick up on that? Because you're at the front end, as I said before. The observation, I think, is well made. What kind of money do I need? The programs that MEST runs, I hope, starts to enable a business to come to you to think about answering that question appropriately. Is that the sort of focus that you think there needs to be more of before we go into the wider ecosystem?
Absolutely. I actually had a word or a phrase, investor fear, or the mystery investor. A lot of businesses, startups, SMEs, know that word investor, but they probably have not met an investor before. Or they know one investor, but they've never really engaged there's no relationship. So there are very few meeting points between investors and the businesses that need them. Maybe this is one of the things we need to begin to create. And the other point about what type of investment, again, is one of the things that a lot of companies or SMEs or startups don't know about. All they know is I want money. But what kind of money? And what are you willing to give for the money that you're going to get? And do you have the right counsel to even know what to give? How do you go about building these relationships? Where do you find investors? So we need to, I think the big gap, we're trying to address that, but I think from an ecosystem perspective, this is a big gap. There are very few meeting points between the people that have the money and the people that need it.
I'm now going to actively try and fill some of that gap. We previously held, in association with the Ghana Investment Promotion Centre, a series of business breakfasts where we brought together the investor and investee community, particularly in agribusiness. And it was noticeable on one occasion, we had 4 of the biggest sources of investment in Ghana sitting at a table. Between them, my estimate was they could mobilize about $1 billion. I saw very few businesses in that audience come and talk to them, collar them, say. So I'm going to open this question up to the audience. Some of you are businesses, and I expect that you're looking for investment funds. There are people up here that will be able to help you with that, answering the questions that you have. So what kind of questions do you now have based on the kind of conversation that we've had in the last 20 minutes or so? Okay, well, I'll use that one. But you've got an opportunity here to ask a question of sources of information and sources of finance. What kind of questions are you going to ask here? We've got one, definitely.
Yeah. The first question I'll ask, okay, what share of my ownership would you want? If it's a minority one, what are the control procedures? How much control would you like to have on my company? I think it's a typical question entrepreneurs and SMEs would be asking.
Thank you.
I think that's you.
Yeah, it depends. So we are quite flexible. We don't necessarily want to take majority. I think it all boils down to the strength of the team and how confident we are that the team can execute the agreed business plan or strategy that leads to growth for the business. So if you recall what Amma said earlier and also what Amdia said, it's through the growth of the business that, as an investor, we also have our upside. So it's really about the team. So we are quite flexible in terms of whether we take a majority or minority strategy. In terms of other protections, typically as an investor, we want a board seat. because we need to understand, and I think you also understand, governance is important. We need to understand how the business is being run, and there are other covenants that we obviously can look at, but it's a conversation. That's the most important thing. It's a conversation.
Francis of Osukobia is my name.
What generally I want to add is that generally investment managers who provide equity would not want to be a majority. They wouldn't want to be a majority because they don't want to run your business for you. They are in the business of giving money, and you are in the business of running your business. And so generally, all the structures I've seen, only few funds would do majority. They would do essential minority positions, but with a board seat, because they want to have influence from the top. And that's generally what I've seen. Thank you.
Maybe I should just add, so there's a class of investment, like typical investments from VCs, that don't even want any part of a business for now. They will give you some money and sign an agreement that in the future, when you do raise equity type investment, then we will take some percentage of your business or we will exit. So it's just, again, to know what kind of money you're looking for.
I started to hear another question from the audience.
Francis of Osukobia is my name. My question goes to the institutions and like impact investing financing. Those who served as bridge between SMEs in Ghana and those who have the money. When we go to our local banks, commercial banks, normally what they tell me, the SMEs, that the reason they don't give us the money is that our business are not formalized, we are not doing the right thing that will attract them to give us the loan. And when you also go outside the country, like the monies which are coming from outside the country, the investor, angel investors and all of them, it's the same story that you hear that, oh, your businesses are small, you don't qualify for our funds. So my question goes to those who are in the middle, those who serve between the SMEs and those who have the money. What are they doing to help we, the SMEs, to formalize our business, to do the right thing for us to get the money? Because in Ghana, the monies are sitting in the bank, but we are not getting it. Outside too, the same thing is happening. Thank you.
Can I just quickly respond to this? You're raising a really important question that we are aware of, and that's why the session after this will focus very much on investor readiness and what it is that you need to do. So I'm hoping that the session will partly answer your question, but do we have any immediate response to that, gentlemen?
I would say that there are quite a number of support programs for businesses. The thing is that as an entrepreneur, you need to understand what the gaps are yourself so that you can be your own sort of curriculum director in deciding what program to be part of, for what goal, and to make sure that by the time you're done with the support, your business has actually transformed. So there isn't a path already drawn out for you, and that's part of the challenge of entrepreneurship, is sort of figuring it out. The enterprise support organizations in Ghana have come together to build a platform, esoghana.org, that is collating all the enterprise support programs that exist and listing them. It's at an early stage, so currently it doesn't have every single program, but in a month or so it will. So that's one place you can go to, esoghana.org, and check and see what programs are going on. But that is not enough. You also need to, talk to successful entrepreneurs in your neighborhood about your business and help them, let them tell you what you need to formalize. Some of the things are pretty basic. You don't need to be in a program to be able to take those steps, and let them help you understand the challenges. And then you can look at programs, look at what they promise, what they'll deliver, and see which one will be a good fit for you.
Also, you need to, I think the first thing I said here was to know what kind of money you are looking for. Because if you approach someone who can do a minimum of $1 million and you are looking for 100,000, that's what he's going to tell you. So you also have to look for angel investors who can come in, highly specialized, give you some funding and also support. And they can also walk you through the formalization process. So we really need to know what you are looking for, because even within the investment funds, they also have a value chain. There are some doing between 50K to 500, others doing 100K to $1 million, others doing 5 million and above. So you really have to drill down to know what you are looking for, the amount you are looking for, and check the investment funds and look at the sizes they are looking at, so that you will know exactly who to approach in this case. Thank you.
Okay. My comment is to the investors in our midst, actually. There are a lot of businesses that are coming up now that are seeking to automate the value chain or solve this problem of helping people like our gentleman actually formalize their businesses by helping them create financial records, have a credit history, be able to do things rather than manually, but online, and then move from business to business online. So I think we need to give such businesses a lot of massive support in different kinds of. Sometimes businesses are not at that place where it will make a lot of money. So maybe grant kind of support will help them, or some support to ensure that they get to the place where they begin to make money. Because now this is about the ecosystem. The records, the information we're looking for, the gap about information. This is how this gets addressed. Actually, we have in our program earlier on a company that's sitting on about 5,000 bee farmers, but like absolutely no records, and they can't get money. They can't get support. So, but there are companies like I've mentioned that can actually help their farmers begin to create records and then aggregate those records, and those records are available for more institutional investors to say, yeah, with this kind of record, we can support you.
Okay, my name is Sedem Atado. I would like to just ask a question in terms of, as a social entrepreneur, and you're into a commodity such as shea butter, and you want to export it, and also aside that goal, you want to also improve the livelihood of the people in the northern sector. If you are probably apply for funding, you mentioned about $1 million, and I'm asking that in that kind of field, do you have which companies or which platform exactly give you that kind of funding? And also my final question is that I would like to understand the term burn rate in terms of, in case an investor asks you that, what is your burn rate? What exact details are they asking for in terms of your burn rate? Yeah.
There's a couple of big things wrapped up in there. Can I just quickly answer that? I'll go back to the self-publicity again. Part of the answer lies in here, because it's a response to the kind of question that we've heard previously. Where do I go? This is at least an attempt to do that. It will give you some guidance as to who might be able to provide you with funding and the sort of deals that they will be willing to do. As far as we're aware, it's the only singular source that currently exists, although I know Impact Investing Ghana is looking to expand on this kind of information. But quick response, particularly you, because you've previously specialized in agribusiness. How are you going to respond to this?
So one of our earlier funds actually invests in a share butter opportunity. So I know where you're coming from. There is scope for value addition, particularly for an impact investor at scale. Again, for that business, you probably need to be looking at a certified product that gives you more value. Then you can pass on the premium to the collectors, who are primarily women. And that actually even strengthens the social impact argument for that opportunity. But when you talk about burn rate, it's just the cash burn rate. How quickly are you, what's your cash need on a monthly basis? We need to understand, how much runway you need to sort of operate on an ongoing basis, month to month. So how quickly are you burning, that cash? How much is your cash need on a monthly basis? But these terms you can also find out from Investopedia. You can Google.
Yes, Google is a great place to go. And I wanted to add to that burn rate usually applies when you're not yet profitable. And so investors want to know, how long will it take for you to run out of money? Or do you have enough money to get to the point where you are profitable? And so if you know your burn rate, which is how much money you're spending each month, then you need to have raised enough money to burn until you get to the point where you are profitable or cash flow positive, don't need investment anymore, or you need to raise money. So if the money is getting finished, you must raise. Sometimes it's called a new round of investments. So if you don't know your burn, you should know your burn rate. If you're not profitable, it should be keeping you up at night, because it's important that before you run out of your current investment, you've either raised more money to take you to the next level. And it usually is used in especially high growth sectors like tech, etc. In Ghana, a lot of the businesses have many of them try to at least make sure that they are profitable on a unit basis. We're doing more traditional businesses, though there are some high growth, high tech businesses.
Are there any other questions? Yes, there are. There's at least one.
My name is Martha Ofori. I'm an agribusiness entrepreneur, and I would like to make a comment as well as a question. So for my brother at the back who said, how do you get support from ecosystem actors? And then you mentioned that in your community, you could go and then ask others for ideas on how they started their businesses. So I'll give myself as an example. When I started out with farming, I had the knowledge, but then I went on to seek training. I seeked mentors who were in the space, visited their farms to learn what they were doing. And I also visited like Ghana Enterprise Agency, for example. They supported me a lot with registering my business. They helped me to certify my products, and so I'm able to supply to shopping malls as well as, the big companies. My question for the impact investors here is there space for support for young businesses, just about a year old, but then you have all your documentations and everything, and you are ready to get into bigger investments to expand? Is there space for very young businesses?
Absolutely. There's space for very young businesses. Mostly you're looking at angel investors. We're still building the pipeline of angel investors. It's not a new concept in Ghana, but we don't have a lot of angel investors. I would say if you have all your documentation, you should definitely go to dealsourceafrica.co or dealsourceafrica.org and register. Once you have all your documentation and you're able to have conversations, even if you haven't reached the stage where an investor is about to invest in you. If you're in their sector and they think you're a promising entrepreneur with a promising team, they may meet with you and want to keep updated as your company changes. And angel investors would definitely be interested in earlier stage opportunities. If you are a high growth opportunity, so you're early stage, but the sector you're in, the market you're in, you can show a very credible plan to get very big very quickly. Even the larger investors will look at you. But of course, you must have the data to back the claims that you have.
Thank you for this opportunity. A follow-up from her question. I want to know if impact investors also give other advice except for funding. So about maybe HR, or maybe you want to move into other sectors. So not exactly just the funding, but you give business advice for small businesses to move forward. Thank you.
Yes, so I would say all investors probably do that, because remember, it's all about creating value. So we would like to believe that the value we bring to the table is beyond the capital. So whether we can provide some operational support, some mentoring even at the CEO level, market linkages because of our networks, etc. So all of these are on the table. Yes.
I'm going to ask because we've set up a number of issues where we know that there are gaps. I'd like to ask one question, but I think it's a bit redundant, because what I'd like to do is ask, I'm going to put you on the spot here, unfortunately, because one of the things that we'd asked you to talk about is what government is doing, hopefully, to fill some of those gaps. So can I give you the opportunity to give us an outline of how you see some of the gaps are being filled from a government perspective? Not necessarily regulation or legislation, but what have you experienced government is doing to try and support the development of the ecosystem?
Thank you. So I will start by just thanking the lady talking about GA, the Ghana Enterprises Agency. That does a lot of training and now help with business registration and also support through, if you are into food, Food and Drug Board license and GISE, Ghana Standards Authorities certification and all that. So GA does that. It used to be NBSSI. And the law that created NBSSI was actually to allow NBSSI to act like a national incubator. So NBSSI by default has business advisory centers across Ghana in every district. And the whole idea was that if you want to do business, you walk there and they give you support. And he's been transformed, now called GEA, the Ghana Enterprises Agency. And the idea was to try to bring all the government enterprises support programs together. So that's what GE does. Then we have the National Entrepreneurship and Innovation Program, which also really works more with hubs. So GE, the business advisory centers are mostly government, but NEIP works with hubs, the incubators and accelerators. They are working with them to build more capacity, strengthening the programs that they are giving to support entrepreneurs. And so most of the programs go through the private hubs managed by young people, individuals, and then they support them to build programs that support entrepreneurs. So that's one other program that is there. There are also actually tax incentives for young entrepreneurs, particularly I think that came up 3 years ago. For people up to 35, when you have a business, you are tax exempt, and that's also ongoing. And then we have the Venture Capital Trust Fund. Let me talk about the Venture Capital Trust Fund a little bit. So the Venture Capital Trust Fund, I said it earlier, the country starting a business is very difficult, and everybody just moves to the bank to go and get money to start. So there were attempts in the early 90s for the Ghana Venture Capital Company to really just try to build the equity type and say that you can also get equity money into your business, which means you are bringing a third party to run the business with you. And then in 2004, Government of Ghana passed a law. Actually, AGI played a key role. A lot of organizations, especially enterprise-based businesses, play a key role. It's really to unlock long-term funding to support businesses to grow. So the VCTF was set up, and it was to build the VC ecosystem. And so the VC, Venture Capital Trust Fund, was not allowed to do direct investment in companies. We were asked to invest in funds. That way, then we can leverage the money Government of Ghana gives to be able to give a lot more money to companies. So that's there. Currently, there are about 7 investment funds investing, and we have 4 coming up. We're going to launch them soon, by next week. So that's that. So there are a few of, and then there are a lot of donor programs. I've sat on a lot of donor programs that support entrepreneurship. Engine program ran for like 4 years to support entrepreneurs. And it was a good pipeline because usually we attend some of these programs and we then now recommend them to the managers to look at, because the whole idea is they have to continuously build pipeline. So some of these programs you need to make attempt to know where they are and where to find them and where to go for support. Impact Investing Ghana has set up this ESO platform, and a lot of the providers are also there. They haven't gotten government money yet, but I'm sure that over time, they can probably try and get some money to be able to build that platform and make it much more, extend the reach to other people. But basically, that is what I know that government is doing, they're working on, especially when it comes to supporting the entrepreneurial ecosystem. What Venture Capital Trust Fund we do, for example, is that we also support capacity building of companies, but we do it for our investee companies. And it's just a simple reason that we don't want expectations, so that if you run the program for non-investee companies, the thinking may be that, oh, insofar as I've been able to go through this program, it's automatic that I get money. So we rather do it for those who have already gotten money. But we run a lot of training programs, and we run a lot of support programs. You didn't want us to talk about the regulatory environment, so I'm going to keep quiet about it, but the regulatory environment helps. So for example, investment funds, if we have the regulatory environment that allows funds to be set up a bit easily in Ghana, we'll get more funds domiciled here. And they will do a lot of such investment. Currently, we are working with the Securities and Exchange Commission to do that. Because right now, when you create a fund vehicle in Ghana, it is created as a limited liability company. And it becomes difficult to manage the exits. You have to liquidate, and you have to go through legal processes. Elsewhere, where you have fund domiciliation a bit easier, it is because the funds are not limited liability companies. So we are also working around a regulatory side to make sure that we build those for the ecosystem. Thank you.
Thank you very much. I've been told that we need to wrap up, so I would like to extend my personal thanks. I knew this was going to be a really interesting session. Thank you very much, every one of you, for your contribution. We've got another question. A last question, and because you're AGI, you're allowed.
All right, just the success story. In the stock exchange, you see the 36 listed. In the alternative market, you see the 6 listed. Could you share your success story? How many companies? What is the extent of financial appetite or gap of success? I mean, hey, each company, averagely, we've done 10 million, 5 million. Because there's a myth there with most entrepreneurs, including myself. The myth of how we struggle to get to the venture capitalist, you put in an application, and the throughput time or the turnaround time, it's even a frustration that hinders members coming to you. So if we could get success story, timelines, deliverables, on each case, we'll be excited. Thank you. Thanks for the opportunity.
Those are a series of questions that warrant a completely different session. In addition to which, part of that question will be answered in another session today, where we will hear stories of success from two agribusinesses that have successfully raised capital, and we will hopefully be able to answer some of those questions. So can I leave the answers really to that session, because it would be stealing some of that thunder? But I would like a quick response from you, because I know you're in a really good position to answer this, and also some of your graduates from the MES program are also in a good position to be able to demonstrate this.
So for one of our funds, we deployed about $33 million across 12 businesses. In terms of social impact, we estimate that we've affected close to 4 million beneficiaries across the portfolio. So we had investments across 5 West African countries. 2 of our companies actually are being actively pursued by external parties in terms of acquisition. So for us, this would be highlights of success.
From our end, so at MEST, we train technology or software entrepreneurs. And in terms of successes, we have companies like Mikasa, that's the largest online housing real estate retailer in Ghana. We have companies like Trotto Tractor that helps people, farmers get tractor and technical support for their businesses. Trotto Tractor is currently operating in at least 2 countries, and I think they're already in Ivory Coast as well. So in Ghana, in Nigeria, they're even doing more business in Nigeria than in Ghana. We have Agro Innova, that it's in poultry, and they've digitized the poultry industry. Agro Innova is operating in about 17 African countries as we speak. So software, in my case, I thought I'll make a good case for tech actually and for software. A lot of our businesses, SMEs are very small. And because they're small, the potential for growth, because you're manual, your potential for growth is very low. And so you don't attract the big time investors. But if you were going to bring software into your business and potentially aggregate others like you, so I'm sure there are probably hundreds and thousands like you across the country. You know your business. So if you could bring tech into your business and then aggregate the other thousands like you, from doing your maybe 100,000 CDs, now you're talking about probably doing 10 million CDs. Now your business has, just escalated by just introducing that layer of tech and aggregation, and then you become a lot more attractive. So please begin to think about bringing tech into your business.
Thanks, Femi.
So I just want to mention a few of the companies. We've done almost about 70 companies. And so the Swedish Ghana Medical Center, the Diagnostic Center, I don't know, Legacy Girls is very popular. Africa University of Communications. So we have put real money in real businesses in Ghana. Sometimes the reason why investor funds is called private equity is because most of those transactions are private. So you don't get to know. But there's been a lot of businesses getting a lot of money in this country, and that's why I said, first of all, think through what kind of money you are looking for, and then begin to search who provides that kind of money, because they are here. The sizes differs, but when you decide which kind of money you are looking for and what kind of size you are looking based on the size of your company, then we start the journey. But we do have good businesses raising money in Ghana and operating in Ghana. Thank you.
Thank you. Now, we've had enough now. You're going to cut us off. Excellent. Thank you, MC. That's what you need to do. Thank you, everyone, and we'll go to the next session now.
Thank you very much, Mr. Sean Dugan, ladies and gentlemen, and the panelists. The investment opportunities are really there. You need to find them, and you need to go for them. Quickly, we're going to move on to our next speaker for this afternoon. And this time around, ladies and gentlemen, we're talking about businesses in Ghana. Are businesses in Ghana investment ready or not? And the first topic is finding investment and the path to investment readiness. To help us with this topic, ladies and gentlemen, I'd like to call on the founder and CEO, Wangara Green Ventures, Mr. Ebenezer Arthur. A round of applause for him.
Thank you very much. I have a presentation for this, so I'll wait for them to bring it up. And I hope I can answer some of the questions that were raised in the previous session that were to the next session we'll try and handle. I'm basically going to talk about, how do we approach finding investment, and then this whole big topic of investment readiness, right? And I will not go into process as much as the thinking behind it, and the key considerations that we need to give when we are thinking about investment readiness. Next slide. We can skip this, please. I used to run, Hub with Nelson, so I came from that side of preparing companies, and now I invest. So I believe I've seen both sides, and hopefully can bring some of these out. Next slide. Next, please. Yeah. So I think that there was a question that someone asked about, what do companies that find themselves in the middle? They can't go to the banks, they can't go to the microfinance, what do they do? This is really what we are calling the missing middle. And the fact is, it is real. Companies are finding themselves stuck because they go to the banks and they just are not a good fit for the banks. They might have the documents and all that, but the banks just can't look at them. Whereas the money they need is bigger than what the microfinance can do, and they can't also afford the very high interest rate of the microfinance. If they just need it for 2 or 3 months, they can just buy the bullet and take it. But when they need the money for longer, a year, 2 years, 3 years, that becomes an impossible ask. So on the next slide, you would see that we are not just stuck with these. There are a number of other sources of funding, right? It comes from the banks and financial institutions. You can throw in the stock exchange and everyone in there. You have the personal investors. Some of these we will call this is like your people you know. You also have number 5, which are the angel investors. So these are people who have money and want to invest in other people's businesses and get something back. But you will see that a range, incubators, government programs, even entrepreneurship fellowship programs. There are some fellowship programs that will fund you to cover your cost so you can run your business. And then there are 2, 12, and 13, I think, are very important. We usually don't think of them as funding options. And so sometimes when we even go to the banks, we start talking on the wrong footing because some of them can provide us purchase order financing, whereas some of them can provide pre-sales financing. And this takes away the uncertainty of what are you using a loan for, because they can tie it to, say, a contract or some particular order. So these are various options available to us. I will focus a bit more on number 6 and 7, which is the venture capital and private equity. Next slide. For these two, next slide please. For these two groups, that's the venture capital and private equity. Can I have the next slide? Okay, over here, what I've done is just to give you a range of some of the funds that are operating in Ghana at the moment. This is just a snapshot. What I've shown here are really, these are Ghanaian funds. As Amma said earlier, there are a whole lot of other funds that operate in the country, but may not be domiciled in the country. But you will see that my firm, Wangara, we are a green fund. You have Merepa, which also focuses on early stage businesses. You have AV Ventures, they are specialists in poultry, right? You have IMP, which has a team in Ghana, and they've been doing early stage businesses for a while. But you will see that a slight difference between them and, say, Merepa will be now they are doing bigger investments from 2 million going up, right? Whereas a fund like ours would do below $500,000. You have Injaro, I think Yao spoke quite a bit, and Oasis. Growthing has been around for a while. There's Impact Capital. They are focusing on industrialization and agribusiness. And then you have RDF. They also focus on agribusiness and renewable energy. Venture Capital, put them on the left because they don't invest directly, as Hamtia told us, but they invest in these funds so that these funds can invest in SMEs. Next slide. There is something that we need to note, and that I call other people's money. You see, the funds, as we see them, are not investing with their own private capital. So if you came to me, what I'm essentially investing is money probably coming from a pension fund, money coming from some private individuals, some DFI, and that has a meaning, because it means that that money was given to the fund manager based on certain theses that they sold. And it means that they need to invest based on that. But more importantly, they need to return the money to these investors. So whereas most often you might just hear about the fund managers, the investors behind them really influence how they behave and what they can do. And so this would really set the tone for how they look at investments. We can go to the next slide. And that really brings to fore the fact that all investment funds are not the same. And it's important for SMEs to know that. Investment funds are not the same. They vary in terms of their preferred sectors, right? So you might go to a fund and might say, you are not a fit for me simply because they don't want the sector you are doing or cannot do that sector. I'll leave this slide, and I try to make it a bit detailed so you can use it as a reference document. Kindly go back to the previous one. There are other things like if growth expectation and impact returns they are expecting from the business. So you might think you have good growth, you have good business, but it might be that the growth expectation you have does not really suit what the fund is supposed to do. There are some funds that are high growth businesses. So even though your business, the things we check during due diligence,